Hey there, folks. Today, I'm diving into an essential metric for financial analysts that can help you gauge economic equilibrium, the NGDP growth output gap. Let's break it down. First, let's define NGDP, or nominal gross domestic product. It's essentially the total market value of all finished goods and services produced within a country, without adjusting for inflation. Now, how does the NGDP growth output gap fit into this picture? The NGDP growth output gap measures the difference between the quarterly year-over-year NGDP growth rate and the concurrent quarter S&P 500 earnings yield. Why use this metric? Well, according to economic theory, in an equilibrium macroeconomy, the mean economic growth rate and the rate of return on capital should be equal. Over the past 30 years, the data confirms this theory. The difference between the mean NGDP growth rate and the S&P 500 earnings yield has been a mere 0.04%. This tiny gap supports the concept of an equilibrium relationship. But what does this mean for you as a financial analyst? A positive output gap suggests that the US economy is running too hot, with NGDP growth outpacing earnings yield. Conversely, a negative gap indicates the economy is running too cool. Returns to equilibrium are inevitable and generally occur within about 5 years, unless significant monetary policy shocks intervene. You can leverage this measure to determine the sustainable real GDP growth rate. Simply subtract inflation from the sustainable NGDP growth rate to find potential real GDP growth. And why the S&P 500 earnings yield, you ask? The S&P 500 index represents roughly 80% of US stock market capitalization. It includes 500 of the largest companies, which rely heavily on economic growth to drive earnings growth. This metric is a powerful tool in a financial analyst's arsenal. By understanding the NGDP growth output gap, you can better anticipate economic trends and make more informed decisions. So there you have it, a quick dive into the NGDP growth output gap. If you found this helpful, don't forget to like, subscribe, and hit that notification bell for more financial insights. Thanks for watching, and I'll see you in the next video.